Hello my fellow freedom builders and welcome back to the channel. As you might remember, last Monday I started a new series here on the channel called Mining Monday. And today of course we're gonna have the second episode in this row of mining videos. And today we're gonna pick a bit of another area than last time. Of course we are gonna have a look at the gold and silver and dollar as we did last time. We're gonna have a look at the GDX and the GDXJ, which are the two gold mining ETFs, but we're also gonna have a look at some silver issues here, some silver prices. We're gonna have a look at a silver ETF, and we're gonna have a look at why we think that silver can explode in price over the coming years, much more than gold can. Then we're going to have a look at Capital Gold. There came some news last week and it pushed the price a bit down, but we're going to have a look at why we are actually very positively very positive towards Capital Gold right now. And we're going to have a look at a little new company, a little new stock in our portfolio called Palladium One, what it is, why we bought it. I know that I promised you some silver stocks this week, but it'll have to wait till next week. Otherwise, it'll take several hours to talk through all of this. So let's get right into it. Remember to subscribe to the channel and like the video if you like the content. All right. First of all, we'll have a look at the gold price. And as I said last week, the gold price is in what we call a bull flag right now, meaning it has gone up quite a lot. And right now it is in this kind of flag. And when it breaks out of this, if it breaks out of this, of course, we will probably see a very nice spike upwards in price. Now, since last week, we can see here, not much has happened. It went up a bit and down a bit, and there's not been any significant break here. If it doesn't break, if this area holds, then we might see some downwards movement down towards the 1820 area here. And of course, if it drops, it'll also affect the gold mining stocks. If we look at the silver, and this is not this is the spot price, not the future price here. But as you can see, it's pretty much the same picture here. There's a bit of a tendency towards turning downwards, and that might happen. And then we might spend the next something like a month and a half going a bit downwards and sideways before we hopefully will turn upwards. That at least will help our mining portfolio. Now, when we're looking at the DXY, that is of course the dollar index, then we can see that that has actually broken downwards. And if this break downwards can hold, then I think it'll push the gold and silver price upwards. They tend to correlate negatively, meaning that when the dollar goes down in value, people want more dollars for their gold and silver, and therefore the gold and silver price will increase. So we have seen quite a clean break here, and it is fighting a bit, but if the dollar turns downwards again here, then of course the gold and silver will go up. That has a lot to do, as I mentioned last week, with the stimulus packages and so on from United States. But right now, this is a picture we see. So as I said, if we see the DXY, you can just take the DXY here in TradingView and see that goes further down. Then we should definitely look for a break upwards on these bull flags here. All right. Now looking at the GDX, the gold miners ETF here, we see the exact same picture. There's nothing much changed here. Still moving downwards towards this area I mentioned last time, around the 37 here. And that is definitely an area that I don't think will be broken. Of course, if the gold price really dumps down to 1800, something like that, we might also see the GDX go further down. And when we're looking at the GDXJ, we can see a bit of the same picture here. So it is moving in great tandem with the gold price. But let's get back to silver, which is one of the main topics here today. Because as you know, silver is here around 22, 24, 26 dollars per ounce, and that is of course a lot less than gold, which is up around the 1900 right now. And you could ask yourself, why is that? Why is silver so much cheaper than gold? And that is a question we have asked ourselves as well, because it doesn't make that much sense. Of course a bit, but if we are looking at something in the silver sector here, there's something that really draws us into the silver miners and also buying a lot of physical silver. I am constantly stocking up on physical silver, putting it in my bank box down at the bank, simply to make sure that I am in the physical silver when if the price should go up. And today I'll present you the case why I think that silver will explode in price over the next 3 to 5 years. Now, I have an article here from goldsilver.com, and I'll link to it below here. But in here there are some very, very interesting charts. First of all, here we can see the silver supply. That is fallen and it can't get up. We can see that during the 90s here and up in after 2000, we can see that the silver supply went up quite a lot, but then it has topped. It has topped here since 2014 and is going down. And I know this article is from 2019, but it seems that the trend is still intact. It is going downwards. The supply is falling, and there are several different reasons for that. I'll get into that in a second. But one of them is that today there are almost no pure silver mines left. They are pretty much all a combination of silver and other metals, meaning that the silver is actually only being dug up when they are a byproduct, when it is a byproduct of, for instance, gold or copper or lead or something else like that. So it's not like when we are seeing a rising demand, we can just say, well, we want to make a new silver mine then, because most of the silver mines today are actually not real silver mines, but something else with silver as a byproduct. And that makes it a very complex situation. When we're looking at the top 10 largest silver producing countries, you can see here in million ounces produced or dug up here, you can see that every single country is actually dropping in production. And when we're looking at the silver scrap, and silver scrap is of course when, for instance, in computers, there is a lot of silver used in many computers, and they are trying to recycle that silver. But since the silver price has been so low for quite a lot of years, then this the silver scrapping has gone down as well. So we are not getting as much down here. You can see silver scrap is down 30% from its high in 2005. Sorry. And you could ask, well, if we are seeing a rise in demand, then where is that silver going to come from? And some would say, yeah, like the governments, they have their stockpiles of gold, so of course they also have their stockpiles of silver. But that's not really the case when we look at this. This is the government's stockpiles, that is their overall storage of silver. And as you can see, it has gone down quite a lot, and today it is overall just below 50 million ounces worldwide. Now looking at the demand, that is of course the interesting thing here. When we are seeing the silver fabrication demand, we can see that ever since 13-14 here, where we saw the supply went down, we have seen the demand go up. And I'll show you in a second why, because there are a lot of different sectors using this silver. But for now, just know that the demand is going up and it doesn't seem to stop. Absolutely not. Not with the sectors that are moving right now in renewable energy and so on. So what we see is kind of a cross pressure here. We can see a higher demand, we can see a lower supply that will, without a doubt, pressure the silver up into higher numbers. There's no doubt about that. So in this article, you can see all of the numbers. Here you can see just the silver demand for solar panels. That's one of the reasons I mentioned. You can see just solar panels is absolutely exploding. And you can see that silver fabrication demand in China at record highs. Pretty much every single chart we look at with silver suggests that less and less is produced and more is demanded. And of course, when we're looking at the different things it can be used for, I found this funny little page here, 101 uses for silver in everyday life. And I'll not mention all of them, but it's just to say that silver is used in so many different ways. For instance, here we have in medicine and healthcare, it is used in bandages and different cures for different things, a surgical mesh. It is used for silver-bearing coatings, dental fillings, hospital tap water filters, so on and so forth. And in many areas, you can see that silver is one of the main products in there, in the medical centers. Fight E. coli, also a big thing. But oh yeah, we have the surgical mask, which is a big thing now with the virus and so on. So we have a lot of different things in the medical sector. We can see it in electronics and technologies and circuit boards and speaker wires and RFID tags and so on. We can see it in use of silver in energy and science. We can see the solar panels and double pane windows and silver oxide batteries and so on and so forth. As I said, I'll not mention all of them, but you can see silver is used all over the place. And now you should think then that it would be a good idea to put some money into, for instance, a silver ETF. And yes, you could think that way, and that would be reasonable to think. So let's have a look at the SIL. That is a global silver miners ETF, kind of the equivalent to the GDX, or at least it's trying to be. SIL does a great job capturing the global silver miners market, though it does make some different choices and so on and so forth. Now, that is great, and you can think, well, if I am positioned in SIL here, the SIL, then I will be allocated a lot towards silver. Well, maybe not. Because let's have a look down here, as you know, on the ETF.com here, we can see both the sectors and so on. We can see that, for instance, the top 10 sectors, they have integrated mining, precious metal, gold, specialty mining, and some environmental here. When we look at the holdings, wheat and precious, Pan American we know, Hecla mining, so on. Many of these I've talked about before. So here we have the top 10 holdings. Now my mining and metal analyst, he did a little job. He took this 10 here and then he went through the numbers looking at how much of their revenue actually comes from silver. And now these are the Q2 numbers from 2020. And you can see the 10 top silver producers here. You can see their weight and so on. But look at here, revenue from silver. It is actually one of the largest is the First Majestic Silver. They're getting 58% of the revenue from silver. But then from the others, we don't have more than just about a third. The Hecla mining is 38%, with the wheat and precious is 32%. So what we can see here is actually that these miners are getting most of the revenue from a lot of other stuff. For instance, if you remember when I did my video about the Pan American Silver Corp here, we saw that they had several, I don't even remember the number, but it was many million ounces of gold as well in their reserves, and that's actually some of the things they're making more money on. So silver is, even from the big so-called silver miners, silver is still just a byproduct, which make it so hard to position yourself just towards silver if you don't want just to buy the physical silver product. So knowing this, then you can see the reason, I hope, why we think that silver will multiply in price over the next years. I'm personally buying several hundred of ounces of silver over some month now, and just putting them into the bank, and I am expecting silver really to explode in price. The problem is, of course, that if you want to be exposed to the silver miners, then you're not getting the full silver price rise when you're buying a mine, because they are only getting a fraction of their earnings from the silver. That is a problem, and that is one of the reasons why I'm positioning myself towards physical silver. Of course, also some gold, but a lot of physical silver. All right, so I hope this case made sense. And that is the reason why we think that silver will increase in price. Now, on to the next topic here, and that is capital gold. As you might remember, let's just go down to look at the price chart here. We have that one here. I was talking about capital gold, and the first video I made was up here around, I think it was just around the point 8 here. And I said that I would wait purchasing it until it had retraced back towards somewhere around here in the 55.60 area. Now it actually went further down this last week, and one of the reasons was that we got the first results for the first 3 out of the 15 holes from the Alonso target, and these were so-called dusters. And what is a duster? Well, it kind of says it in the word, but it is mostly dust. There's not the amount of gold that you could wish for. And of course, a stock like Capital Gold that had gone up here from 0.10 to 0.9, almost up 800-900% here. Of course, when people are expecting good news and they come out with some news that are a bit less than good, then of course the price will drop. I've gotten a lot of questions about if I still think it is a good case, and yes, there's absolutely nothing changed with the case as far as I see it. Remember that the Alonso target is very large and it has no outcropping veins, so they need to drill fences to locate a possible gold-bearing vein. This obviously means that some will be dusters, and the first 3 holes were actually the holes furthest away from where they have found gold in the streams, the placer gold. So I was talking to my analyst, and he also expects that the holes from 8 to 15 has a much higher chance of being gold bearing. Now you should also remember that these 1 to 15 holes, that is just in the Alonso target. So there are, let's see here. Yeah, there are at least 10 of the targets in this area. So we are very confident that there will be some very good gold findings out there. So even if Alonso ends up being a complete dust, there are still way more targets to come. In fact, remember that the rig has already moved on to the next target, the Medusa, and has started drilling there. So we are expecting some news coming out from that in some weeks. In addition, the second rig should actually start drilling at the Machichi in the next couple of days, which is also very exciting. At Machichi, there are multiple gold-bearing outcropping veins, so the company has a lot greater chance of success there. At least that is both our evaluation of it, but also the CEO, Alan Carter's evaluation of it. So the Capital Gold, I don't think there's anything changed in the case. I find it a bit funny that people focus so hardly on these first 3 holes that were dusters, and of course it has been hyped up a lot, and yeah, that's both good and bad. Of course, it's good if you have been with us from down here. Another thing, of course, on this downturn is that these lockup periods started to come out now, so people could actually sell their stocks. But as far as I can tell, they had not been dumping their stocks at all. It seems like these investors are also believing in the case, the overall case of Capital Gold. So there are still, I think, a couple of weeks left where they can, where these lockup periods are ending. So of course that can put some pressure on the stock, and don't get too discouraged if you see a price all of a sudden down at 0.4 or something like that. As I mentioned last week, a stock like Capital Gold is not one you should put a ton of money into. You should find some explorers, some developers, some small stocks if you want to get into these, and then you should allocate broadly out among them. And I am personally in Capital Gold. I know that my analysts and some of my investment partners are as well, but we are a bit more long term, and I got some questions on the technical analysis side of this, and you should be careful with doing technical analysis in a situation like this. Now, when there's not really any news and you can see a nice trend here, then technical analysis can be fine. But this is a bit more like these small pharma companies developing a new drug, and a very good news release here can send the stock to the moon. And of course, a release saying, yeah, there were some dusters here, can send the stock a bit down. It is quite, it is not very liquid. So of course, if a lot of stocks, I think it is 30 million stocks, and can be sold right now, if everybody liquidate their locked up positions, then of course that can put some pressure on the price. But I think it is a fantastic case still, and yeah, I have no doubt in my mind that this will go through the roof when they start to come up with some good results. Of course, if everything turns out to be non-gold bearing, then yeah, of course the stock will drop. That is the risk of investing in a company like this. Now on to the last point for today, and that is Palladium One. That is the stock that I'll just mention today. And as a disclaimer, I should say that we have actually taken a small position in it, because they've come out with some very, very good drilling news, some results from the drillings, and we simply could not we could not really not invest in it anymore with the news coming out here. Now, first of all, let's just go to the Palladium One here. Palladium One is mining palladium, platinum, nickel, copper, and so on. It is exploration and development company. And the good thing, or one of the main reasons why we are very interested in Palladium One, except of course from the good results they have gotten here, is that they are located in Finland. And I'll get back to that in a second, why that is very, very positive. But first of all, if you haven't heard of palladium before, and many people haven't, then it is extremely valuable. And it has become more and more valuable. It is, as I said, a lustrous white metal, so on and so forth. You can read more about it. I'll link to this below. But what the exciting thing here is why it is getting more expensive. Because one of the things that palladium is used for, if you read here, about 85% of palladium ends up in the exhaust system in cars, where it helps turns toxic pollutants into less harmful carbon dioxide and water vapor. And now you might think, well, in a combustion engine, why is that a rising demand here? Aren't we going over to electrical vehicles? Yeah, we might in some years. But right now, we cannot really cover the entire market with electrical vehicles. So for instance, here in China, or especially in China, the government has tightened its regulations to crack down on pollution from vehicles, forcing our automakers to increase the amount of precious metal they use. So they are actually forced to use more palladium in the engines there, simply to bring down the pollution. And that has made the price go up quite significantly. If we are looking at the palladium here, you can see here that in the beginning of the year, and in 19 as well, it had a huge spike in price. I was in on some of this move, but not all of it, unfortunately. Then it dropped down with the virus crisis here in the spring, of course, with less transportation and less production in the car manufacturing plants and so on. But since then, it has gone up. It was down at around 1,500 here, and now it is up at 2,300, and I think it will go further up. Now, the stock here, the Palladium One mining, has already gone up some, but again, it is not a stock you should do some technical analysis on, because first of all, we don't have very much data to look at, but secondly, it is very news driven. And if we're looking at the stock, at the Palladium One here, as I said, it is located in Finland. And 80% of the palladium in the world is actually getting out from Russia and South Africa. And if you remember one of my first mining videos I did, I mentioned that one of the things you should consider when investing in mining stocks were the political risk. And when we have 80% of the palladium in the world located in Russia and in South Africa, we can see that they are both countries with significant political risk. Maybe a bit less in South Africa than it used to be, but still it is not one of the most stable environments to invest in. So when we have a mining company that is located primarily in Finland, and I actually think they have a bit in Canada as well, then it is a much more safe environment. Actually, a few years back, Finland was ranked as the best country in the world to be a mining company in, both beating Canada and United States. So since these are, Palladium One is located in Finland and in Canada, it is absolutely outstanding. Now, they have been drilling. I'll not get into the boring details here, but they have been drilling some holes where they got some world-class results. They were getting the 3.52 grams per ton of palladium equivalent, and they also had another drilling where they got more than that, even 4.58 grams of ton of palladium equivalent, and that is outstanding results. And the reason why we have entered the Palladium One here is that normally you see that a company like this is valued at least $50 million per million ounce of palladium equivalent in the ground. And right now, the market cap of Palladium One is actually only around equaling something like $31 million instead of the normal 50. So we actually think that we can get close to a double in price just from this alone. And now you should remember that the normal price at $50 million per million ounce palladium equivalent is worldwide, meaning that is also in Russia and in South Africa, where we have the political risk. So when we have some very, very interesting drilling results here from Palladium One, and they are located in Finland, that should definitely give some extra premium on the price simply for being in a more safe drilling environment. So that is not even taken into the calculation where we think it could double. It might even go even higher up. And this is just from the fundamental side of it. Then we have seen in the mining sector lately that when these small stocks all of a sudden get mentioned, then of course there's a hype going on, and that sometimes can send up the price even more. So another thing, as you mentioned about Palladium One, is actually that Eric Sprott is a very large owner and sees some great potential here. And if you haven't heard about him, he is a billionaire, and he's pretty much he's one of the very interesting investors in a company like this, because he is well known for being able to pick the very best of the mining explorers and developers and so on. So it is very interesting that he is also in the Palladium One. So this is definitely a stock that we think will, or at least have the potential to skyrocket in the coming future. And as I said, as a disclaimer, we are also invested in it ourselves. So that should be said and understand when watching a video like this. Remember, I'm not a financial advisor. I am simply just here on YouTube primarily for educational, inspiration purpose, and therefore you should not really take what I say here as investment advice. But you can have a look at it and do your own research, and in the upcoming weeks and months you can see what way it turns. So of course I have not invested all of my money in this one stock. It is a small amount of my mining allocation money, but I think this has a potential to grow quite nicely. All right. This is about it for today in the Mining Monday. I hope you found some inspiration. As I said, in the coming week we'll do some more analysis on some silver mining stocks, also some small explorers and developers. And remember, if you like this content, to subscribe to the channel, to like the video, to share it with all your friends. And if you want to make sure not to miss a single of these videos, you should go down in the comment section below, looking at the link saying buildingfreedom.dk. In there, you can sign up for my email newsletter here. I can see a lot of people have already done it since last week, and thank you for that. And I will be sending mails out on a regular basis where I am putting my most interesting videos out, so you can make sure not to miss them. That's all for now. Take care of yourself, take care of your money out there, and I'll talk to you again shortly. Bye.